Hi everybody, welcome back. This video is bound to piss some people off, but I feel that it has to be made. The video today is about why dividend investing is a bit of a sham. Now, if you have been a viewer of this channel for a while, that's very contradictory of like some of the things that I would say in my old videos where I focus more on dividends, income, passive income, you could even say. But over the last year or two, I've really switched my investing mindset from focusing on dividends and the income towards better opportunities and total return. And so far, I know it's only been 1 year, but I have massively reaped the rewards of it. So today, I'm going to be quickly going over a bit of my investing history when it comes to dividends. Some of the common things that I see with these dividend channels that I think just should be called out more, and much more. But before we do that, make sure you subscribe because I need money. Something that you will unfortunately now see on YouTube is complete idiots saying that dividends are free money and that it magically grows out of the ground. It comes from the grass, you pick it up, and it's free. It is not free money, unfortunately. What's even more ludicrous is some of these channels that are going over yield max funds and claiming that the distributions from those are free money. That's genuine like grifter level. But dividends are not free money, as displayed in this graph. Essentially, whenever on the stock's ex dividend date, if it pays, let's say $2, it comes out of the stock's price. It's not free money. So once you start viewing it less as free money and kind of comparing it to your total return, I think that's when it made a big kind of change in my investing mindset. For example, like if I would have kept my portfolio in some of these, 2, 3, 4% yielding stocks, more, let's say, dividend growth, you could even say, with that like 8% CAGR, not a crazy amount of stock price appreciation, but pretty safe investment overall, like pretty conservative. I could be yielding right now on a $40,000 account. If I wanted to, probably around like $2,000 a year if I really wanted to. That's pretty high when it comes to the estimates. I'd be yielding around like 8 or 9% there. That's pretty high. Let's say let's say I still wanted to go a little dividend growth. Let's go for 4% of 40,000. I'd be making $1,600 annually. Now, what could I be doing with $1,600? Lots of things. Lots of things with $1,600. But instead, I put it into some better opportunities that maybe don't pay a dividend. For example, Amazon, SHG, even though they pay a very tiny dividend. Google, a lot of people are big fans of. A lot of these companies with higher upside and stock price appreciation that maybe don't pay dividends. Now, something that I think is actually advantage of dividends is the long-term capital gains tax that you can get from it. I think dividends also do encourage like longer-term investing, which I think is fine. But for tax purposes, I think they're okay, excluding like REITs, MLPs, and other stuff like that. Let's say during Liberation Day, I put all my money. I put a lot of money into like Amazon and SHG. Say I put it into like a 4% yielding dividend stock that's up maybe like 5% since then. I don't know, Colgate, for example. Don't quote me on that. I could have that, $1,600 every year in dividend income. Or if you put it in higher growth opportunities, once again, this is this market. This is just this market. I'm not claiming I'm an expert or anything. I could have right now I have like around $12,000 in capital gains since like the absolute bottom of the market. That's when my account was red and stuff. Like that's nitpicking performance. But yeah, I could have had that $1,600. It could have been passive income, or I could have like that roughly $10,000 to $12,000 in capital gains I have right now since the absolute bottom of the market. So you got to put things in retrospect of focus on total return. Don't get caught up in the dividend trap. I've seen a lot of people do it. I want to pull up another example from like absolute peak dividend investing. This is, of course, Walgreens stock. I can't find Walgreens stock for some reason. I wonder why. There's a lot of channels that I used to watch back in the day of like glory dividend investing in 2021 that were pumping up Walgreens. And actually, pumping might be a little aggressive of a word. They were very bullish Walgreens because they were a dividend aristocrat. They paid for more than 25 years, and that completely wiped out the fact that the business model was shitty, the CEO sucked, and it was eventually going to be bought out. But at least they paid a dividend, and that's just unfortunately a lot of people got trapped into that, and it's sad to see. And there's not much accountability for some of the channels that were pumping Walgreens. So that's I think you're one of your classic examples. Another example is Intel, like $55. It's on a 12% dip. and they pay a 3 or 4% yield. Oh, it's a great opportunity. Stock falls in half. Like, you just got to be aware of like these companies that happen to pay dividends, but also the business model is very shitty. I think this video is catered more towards like newer investors. I think right now, I do own a couple companies that pay a larger dividend, i.e., Evolution Gaming, Jackson, but those companies have real theses that do include like stock price appreciation happens, they pay a dividend. For example, if Jackson just has a lot of free cash flow to pay out to shareholders, and Evolution is one of those companies. It's like a sin stock where they have massive free cash flow. They already have paid off a lot of the costs to run the games itself, and they have more money to give back to shareholders. The big takeaway that I want to share in this video, though, is kind of that comparison when it goes back to April, like that Liberation Day sell off. Yes, I could have put my money into maybe a 4% yielding stock. I could have got $1,600, or I could put it into a company that has better total return prospects. And this goes for like the long term as well. I had long term gains in like a really short period of time. I'm up like 20% on Amazon right now, so that's like looking back at historical averages, it's like 2 years of gains right there. Um, so yeah, would you rather have like the $1,600? It's passive income, you get it one way, or you have a better total return. You quite literally have like 5x that return, but the money is looked at different. And obviously, I'm not like talking about taxes as well because that's like a whole another video. I do think dividends are solid when it comes to like taxes and long term capital gains. But yeah, overall from the video, just don't get caught in the dividends or free money trap. Just kind of wanted to share my personal experience when it comes to that. You have a lot of channels. I think less now, but a lot like back in the day, that would just base their entire thesis off of a 10-year dividend growth rate, which is just, if you see a channel do that, I would probably not watch that channel anymore. All right, thank you all for watching. And to end off the video, ironically, do dividend stocks, not drugs. Have a good one.